Hey everyone, so for those of you out there who are interested in following Tencent and Prosus along, just like myself who's invested in this in the Prosus part of this investment, I'm going to do an update now on the Tencent earnings that have come out recently. So that's their 12 months numbers, which is really good to see, so we can sort of get a bit of a feel for how this is tracking along. Now, if you want a pretty general update on this, better probably than I can put together, Eugene on Twitter, here's the Twitter handle here. Follow him because he's done a really good summary on Twitter, and I'm going to go through some highlights from the summary that he's put together, plus the actual earnings report from Tencent that I found interesting as well. So it's a combination of the two. Easy just to go follow along Eugene there. So here we go. So I think the picture here on the screen shows pretty clearly kind of what's happened over the last couple of years. I think this is a really good little graph here. So you can see on the right-hand side, you've got financial year 2021 to 2022 essentially being flat. Like it's down very marginally on the revenue for the entire business. This is all of it combined. But if you look at the quarterly numbers, you can see from fourth quarter 2021 to fourth quarter 2022, it's flat. So you're like, okay, what's going on here? But the story is in what happened in Q1, Q2, Q3, Q4. So the heavy lockdown, the increase of capital, the increase of costs in Tencent, the regulations inside of China, that you have that big hit from fourth quarter 21 to first quarter 22, stabilized in Q2, and then started to grow back again. The business was in Q3 and Q4. And that's why people are getting interested in Tencent again. That's why the stock has started to improve. It's because even though we're exactly the same situation, there's been zero growth for 12 months. Well, it's the story that's telling. It's been down and then back up. So you got hammered and then it's come back up, and the stock price kind of reflects what's happened to the underlying business here, which is good to see, I guess. So the interesting segment that I think from here is that you've got domestic games falling down to now just 19% for Q4, where it used to be sort of in the 23-25% range of their revenue share. So that's the contraction there. The increase, the area that's increased, I guess, a little bit is international games has increased a little bit from sort of 7-8% to now 10%. So that made up for the reduction in domestic games. We all know why domestic games went down, right? Because China implemented the regulation that children shouldn't be playing computer games more than like 3 hours a week or something like that. I can't remember the exact details, but the Chinese government essentially has impacted the domestic game market in a way. It's not super dramatic, but it's hurt Tencent's business a little bit. They're going to have less users overall, of course, if there's all the kids aren't playing the computer games. So picking up the slack again is, they're focused more on international games, and that's really about it. I guess the next section was sort of like online advertising started to pick up again. So it's at 17% now, where a few quarters ago it was only 13-14% of their revenue. So that's the other part of the equation that's got us back to where we were. Now, a little bit of commentary around the ad segment from Tencent. I'm going to read it here word for word. So you've got the overall outlook. We believe the advertisers generally cautiously optimistic on a China consumption recovery this year. Great demand to advertise in the short form video format to consumers. Now, WeChat is, of course, the jewel here of Tencent. So let's, I'll explain exactly what they said about WeChat, and we can then I can explain that further. So when they're talking about the advertising revenue improving in that short form stuff, Tencent said this. So time spent on mini programs and video accounts doubled and tripled year on year respectively. So each exceeding time spent on moments. Moments is like shorts. Mini programs has become a leading transaction platform in China, generating several trillions of renminbi of transaction value in 2022. In WeChat, they've got now like shorts and small videos, a little bit like TikTok or Reels in Instagram or Shorts in YouTube, that type of thing. WeChat has their own versions of those types of things. So there's new things coming out on WeChat all the time that are sort of adapting to changing consumer tastes and things like that. And that's giving them just more places to grow their advertising revenue. And this is the beauty of WeChat is they've got, I think WeChat users grew about 3 or 4% from 1 year ago. So that's like 1.3 billion people use WeChat. That is insane how big that number is. And that is really the core of the thesis of this Tencent investment is WeChat just being so important in everyday life to most Chinese people and more to people associated with the Chinese people. So if you're in another country nearby, you might be doing a lot of dealing with China. You're going to need WeChat to communicate and transact and talk and discuss and plan business stuff with. So the domination of WeChat hasn't changed at all. If anything, it's grown a little bit and it's still as strong as ever. Now, it isn't all smooth sailing. Let me go through some of the lowlights that I found in the report. So like I said before, domestic games is down after that miners protection program instigated by the government. We've got the cloud, Tencent Cloud. That is still a loss-making venture, but it's a work in progress, but it's still not making any profit yet. And margins overall for the business across most segments have actually come back quite a lot. So there's been the increase in general and admin costs without it translating into increased revenue. So they've had to hire more staff, spend more money on staff, yet that hasn't translated into improved revenue. Then you've got just increased financing costs in general with increasing interest rates. And then you've got there was a significant marking down of their investment portfolio just because a lot of their investments they've got in private businesses or public companies, the valuations have come back quite a lot in the last 12 months. So the overall equity part of Tencent's balance sheet has come down, and it's mostly due to the reduction in their investment arm. Okay, so here's my summary. As China goes, I think so does Tencent, for the foreseeable future anyway. I think long term, they are a more global business than just China. But in the short to medium term, China's performance and Tencent's performance are going to be very interlinked. And regarding China, well, you've got the serious COVID restrictions that were in place over the last couple of years there in China. And some sort of recovery coming out of that in China is going to be very beneficial for Tencent in the short term. And regarding valuation, they're sitting at right now at about, I think it's 21 times free cash flow on a pretty rough 2-year period. I think with any recovery in China, that free cash flow can easily return to growth and the stock will look pretty cheap in hindsight. I don't need to get too far into this, I don't think. It isn't a screaming bargain as we need to see things unfold, but Tencent is just such a beast of a company, and I'm happy being an owner indirectly through Prosus. Okay, to get a little bit more specific, I actually think Tencent is a little undervalued. I think probably its fair value is somewhere around that 55, 60 USD a share, something like that. I think we're at about $48 at the time I'm recording this, so maybe a 10, 20% undervalued business at the moment. Maybe it's even around fair value. It's not a screaming bargain like it was a little while ago when it was down in the $20 range. But if Tencent and China are going to grow into this, like coming out of the pandemic and just Tencent continue to be the beast that they are and have been over the past 20 years, well, this is going to look like a very good price, but let's go get it cheaper by going through Prosus. So Prosus owns a huge part of Tencent. They are the biggest shareholder. They invested many years ago. It's been widely documented. I've got videos here on my channel explaining that. If you're interested in buying Prosus, by the way, you're going to need interactive brokers. I think they're the best. I use the brokerage platform that I use to invest in Prosus here. You can invest in Tencent directly through the Hong Kong exchange as well through interactive brokers. There's a link in my description if you want to give it a test try. Maybe you're just a little unfamiliar with the platform and you'd like to see how it looks. You can take a free demo for a spin. I highly recommend doing that. Link below in the description if you're interested. Now, here on the screen, I've got the net asset value calculation for Prosus, and we're looking at the listed assets. So Tencent makes up $123 billion of their listed assets out of 132. So it's 95% of their listed assets here is in Tencent. You got some other ones here. So Remitly, Udemy, SimilarWeb, but they make up such a small amount of really. Prosus is essentially buying Tencent and some other stuff. The unlisted assets, and this is done through the valuations of these is through I think they got 17 sell-side analysts to work out the valuations of all their different private enterprises, and the consensus of these analysts comes to about 25 billion, roughly. That's probably about right. I actually feel pretty comfortable with that. I had a look at how they did that. It seemed not too far-fetched from my eyes. So I think this is actually pretty good. On the Prosus website that I'm looking at right now, what you can see, this net asset value per share, I think that's pretty good. I think that's a pretty fair calculation of what the net asset value of Prosus is. I don't think we need to adjust this too much. I'm pretty happy for this to be a ballpark. So I think personally, around about a fair value of Prosus would be around about a 15% discount to the NAV, this net asset value, because they've got this other layer of complexity and management, and they could technically, any of the dividends that they're receiving, make bad investments and it not work out really well, and they kind of be value destructive. As long as we keep that Tencent stake, we're going to be okay. But I think a little discount is fair enough. And I'm going to feel about 15% discount would be 15% discount off that net asset value would be around about what I would call fair value of Prosus. Hopefully that changes and it's actually, you have to pay a premium to get it, but that's okay. Let's just call it what it is. So I think fair value for Prosus shares are about €100 per share. Now I think Prosus grows with Tencent and Tencent grows with China. So effectively what we're going for here is Tencent to continue showing signs of growth. Maybe they start at single digits moving forward and turning into that 15-20% that they had been doing for the past 20 years. As a China recovery starts to get going, and Tencent being such the great company that they are and spawning all these new ideas and doing all this great stuff and growing faster than GDP and just generally China because they're a really great company. So I'm hoping that we get sort of this 15 to 20% tailwind from Tencent, but then you get a closing of that net asset value of Prosus, and I'm looking at a 20% plus longer term investment here. That's my upside scenario here. I think the downside is that we might get at the moment the share price is I think like €70 a share. That might just come up to 100 quite quickly, and if it does, and I see Tencent as sort of only growing at sort of single digits, that might give me a reason to sell. Maybe the thesis has changed, but I'm just going to monitor this every year essentially. So I hope that made some sense. That's my update for the year on Tencent, therefore Prosus. Prosus have been buying back a lot of shares, by the way, I forgot to add before. So that's hopefully going to improve that net asset value per share on a per share basis, which is good for us. But as long as they're doing that when there is a discount to their NAV, I'm going to be happy. Essentially, I'm just going to check back with this next year. I don't really think I have to worry too much. I think I'll just sit on it for 12 months, keep an eye on the price just in case it gets super overvalued or something like that happens. Or I think maybe the recovery in China gets pumped up a little bit and all the stocks get pumped up, and I think maybe it's a little bit overdone. I'll reassess a little bit. So all I'm really going to be doing is checking on the stock price in relation to the net asset value of Prosus, and that's about it. In 12 months' time, I'll read the report of Tencent again for their annual report and reassess. So that's the plan. I'm very interested to hear if you have a different opinion to mine. If you do, I have a Discord group where you can talk with me directly. And some other great investors are in that group at the moment, and we're having a really good time talking about different ideas. And if you have a different take on Prosus or Tencent, or maybe a negative or more positive, please discuss it in there. That'd be really cool. So, and help more people out about it. And different opinions always make for better investing, I think, for all of us. So yeah, that's it for today. I hope you enjoyed. I will see you in the next video.